Today I'm joined by Altus Strategies Chief Executive Steve Poulton for the latest episode of RGN's Interviews in Lockdown. So Steve, how is Altus's hybrid business model, markedly different to other players in this growing mineral royalty sector?
Hi, good to see you, Jacob. And yes, it's a very good question. We're not a pure play royalty company, and we're not a pure play exploration business. We believe that the sweet spot in the exploration side is when you make a discovery, and it's ultimately the mining sector when you take a revenue stream off of the underlying asset. If you're able to do both, you really do capture the best of both worlds. And that's what we try to do in Altus, and it's what we're proving is possible. So our business model is to stake ground, make discoveries, partner with different groups who are going to advance those assets, and we get paid along the way. We exit the asset, monetize it for our shareholders, and retain a royalty interest at the back end. Now, it takes quite a while to develop a portfolio in that way of doing it, but you do have 100% of that upside and 100% of the royalty, and the in cost is really minimal. So the value creation can be huge. It does require certain skills. It does require, from management that is, it does require shareholders that are patient and that understand the sector and that aren't looking for necessarily a quick turn. And over time, these models can generate fantastic returns to their shareholders. So we are different from pure play companies in each respect, and we do feel as if we're capturing the best bits of both.
What does the company's institutional investor backing say about this business model, particularly with La Mancha coming on board earlier this year?
Well, it says a lot. We've got a very decent shareholder register. The board own about 20% of the company, and that's always useful for providing investors, institutions with confidence that the management team are acting as shareholders, acting as owners effectively rather than purely salaried managers. And what that has helped us do is, as you say, build a very good institutional shareholder backing. And La Mancha acquired a 35% stake in the company in February. They appointed their CEO to our board, and they have the right to appoint another director as and when they wish. And I'll touch on that in a second, but behind La Mancha, we also have a number of other very decent shareholders, including Sprott. Obviously, they've been backing us since 2012, really, through many rounds of financing, through obviously a very deep recession that we went through. And we have a number of other high net worth, ultra high net worth investors, individuals that have been very successful in the mining sector over the last 10, 20, 30 or 40 years, have become shareholders of Altus, and we could probably, in the space of 9 or 10 phone calls, capture maybe 80% of our share register. And that means we've almost curated our share register as well as we've curated our portfolio. But back to your earlier question, why did La Mancha take that strategic position in the company? Really because their strategy dovetails quite elegantly with ours, we believe. They are very strong believers in Africa and in the mining sector. They have large equity positions in Endeavour Mining and in Golden Star Resources. And so they are keen to have exposure to the discovery phase. And those companies don't necessarily give them that discovery. The new discoveries made by those groups don't move the dial on the share price. And we provide that avenue for La Mancha to have exposure to diversified but very much gold weighted or gold focused portfolio of assets in Africa and early stage. But also the concept of having royalties in the business model, and that is also something that La Mancha are interested in, as we are. And so it really is a very good and very strong meeting of minds. We have very large, ambitious plans for the company. We want to go into new destinations in Africa and potentially outside of Africa, but certainly in Africa in the first instance. And that would be in respect of new discoveries, new projects, new partnerships, new assets, but also in respect of royalties and royalty transactions. So I think we provided a perfect avenue for them to execute the business model that they were looking for. And from our point of view, they provide us with a very interesting and very valuable balance sheet and credibility in terms of the time it took for them to undertake their investments into Altus. And we believe that it'll be a real win-win for both sides.
So why does the company focus, exclusively on Africa as opposed to maybe other emerging jurisdictions or established mining jurisdictions?
Well, it comes down to the size of the continent, really. And the size of the continent has meant that it's relatively underexplored. And it's quite fascinating, actually. I think the average depth of discoveries in North America, let's say, is in the US and Canada, it's around about 190, 200 meters below surface. To find assets at that kind of depth, you have to expend a lot of money on things like geophysics, on various ways and means to try and detect where that ore body might be. But ultimately, you have to drill, and you have to drill very long holes, and quite a few of them. It's an expensive process, and if you're not successful, you have to move on and take your loss. In Africa, because there's not so many companies exploring in the continent, and the continent is simply huge in geographical scale, it means that the average depth of discovery is around about 9 meters below surface. And you may say that 90 out of 100 are at surface and at 10 are at 100 meters below surface. But by and large, nearly all the discoveries that Altus have made on the continent of Africa have been found at surface. And that means that you can move really quickly from concept to discovery, and hopefully from discovery to monetization. And of course, along the way, sometimes it doesn't always work, and you have to move on quickly. And that means you can do that in Africa. You can quickly make a decision. You're going to cut your losses and run before you've invested too much of your shareholders' money. And there's also some human factors where companies that have invested large sums of money in a project can tend to sometimes feel that they are obliged to continue rather than make the tough call to walk away. If you've spent much less already in the first place, it's a much easier decision to move on.
And so looking at the company's current royalty segment of the portfolio, are these all projects that have been organically generated by Altus before bringing in partners, or, is there a mix of acquisitions in there as well?
So far, they're all organically generated. And we've struck our first royalty deal almost a decade ago. And over time, we've been adding to the portfolio. And I'd expect in the next 2 or 3 years to see that organic royalty portfolio grow quite dramatically. As you see in the market, we're monetizing a few assets now as the cycle has seemingly turned for the better. In due course, we would expect to add to that organic portfolio with some non-organic ones, which would be ones that we acquire third parties, potentially through capital to exchange for a royalty plus a royalty, but also potentially acquiring existing royalties from willing sellers. The latter part, that process is rather competitive. I think as well something is worth to be accretive number of potential transactions I would expect continuously. And with a longer term view, and by that I mean say 4 to 5 year view, I'd be very surprised if our portfolio was not substantially larger, was not substantially cash paying, and was not maybe potentially more than 50% backed by royalties in number that we'd acquired versus that we had written. And we do expect to have a large portfolio in due course. But by the same token, I would double back on the very start of the conversation and just remind that half of our portfolio will probably also be discoveries and exploration projects. And while the royalty companies do quite well and they get a good markup on their prices based on their revenue streams, they simply don't have exposure to a drill bit discovery that can turn relatively low value property into a $250 million deal. And that's a very interesting part of the Altus model that they do not share.
And so looking at the company's current exploration projects, you're helping advance 3 projects in Mali this quarter with RC Drilling. So why do these resemble an exceptional investment proposition as described by the company?
Yeah, we have 3 properties. You say 3 properties being drilled in Mali, and it's very few exploration companies provide as much drill meters per share as Altus right now. Approximately 20,000 meters of drilling are going into those 3 assets we have in Mali within a 3-month period. And that's a fantastic opportunity for shareholders to have exposure to discover into the value that each one of those meters could potentially make to the whole business. Now, 2 of those assets are with Marble Gold, our ASX listed joint venture partner. The first is an asset called Lekamfla, and the second is called Tabakoroli. Tabakoroli has a close to 1 million ounce resource on it, whereas Lekamfla is located just 5 or 6 kilometers from a number of the pits at the Sadiola gold mine, which has historically produced well over 10 million ounces of gold. looking for a very distinct karst style ore body, and drilling has been completed on that. We're awaiting assay results right now, and Tabakoroli drilling was completed. The resource was upgraded, and further drilling is expected to commence quite shortly. The third asset is the Diba Gold project. That's a 100% owned asset for Altus right now. We're undertaking a 10,000 meter program right there. Some of that is focused on the existing resource area, about just over a third is on the existing resource area, and 2/3 are on further targets within the Diba license, the wider license block that we've got there. That property is around about, well, less than 15 kilometers from the Sadiola gold mine. Currently has a resource of around about 400,000 ounces on it. We announced a PEA on the project, which at 1,800 gold delivers around about a 140 million net present value after tax, which is around about 3 times our current market cap just on that one asset. So those are our 3 assets in Mali that we're advancing right now. We've sold 2 in Mali to TSX listed Desert Gold. We're in the process of closing a transaction with Stellar Africa across the border in Ivory Coast on 2 further gold properties. And while I'm in the area, we also have a joint venture with Resolute Mining, also in Mali in that case.
And also looking across the portfolio and across the continent, you're invested in multiple projects in countries like Cameroon, Ethiopia, Morocco. So how do you balance the workload in terms of operating in these different jurisdictions, projects at different stages?
Yeah, it's a very good question. It's a distinct blend of art and science. There's a number of things that you have to combine when you're doing multiple programs simultaneously in different jurisdictions, sometimes for different ore bodies and different geological terrains. It's really, I'd take a few steps back, and when the financial crisis hit in 2008, Altus was only 1 year old. And rather than continue to invest in the exploration sector, we decided to become investment managers. And we managed to, with the help of our brokers, we managed to launch a fund on the specialist fund market at the London Stock Exchange. We raised about $50 million. We had very interesting, exceedingly blue chip resource investors, I should say non-investors, becoming resource investors and investors. That was a very useful experience for us as a group. It was a 5-year closed-ended fund. It generated and performance fees and management fees to us. But more importantly, it taught us as a business how to not just in capital that you deploy, but also in other time and other resources that you deploy at the portfolio. And you can try and make decisions. How likely is this going to be successful? Time frame for the success to be achieved, and what do I physically need to do to get to that? Is it achievable? Is it desirable? How does it stack up against our as part of a wider portfolio? Does it contribute? Is in any way now? Are we overweight in that commodity, that jurisdiction? All of these elements come into play. So it's a very fluid and dynamic situation. Something we constantly do every day. Really, we're looking at this, and as I mentioned before, we are looking to grow our portfolio in Africa into new countries, probably into the gold space, but also into copper. And that whole idea of having the diversification is really value add to our shareholders. Things can and do go wrong across the world in different countries. And it's good to know that actually you're not exposed too heavily to one single country or indeed one single commodity. So it's an ongoing process, it's true. And also with La Mancha coming on board, we have the opportunity to do more far-reaching deals and projects. And that also is part and parcel of our decision-making in terms of our allocation of human and financial resources.
And a final word on CSR. How does a royalty generator company like yourselves manage its CSR responsibilities across multiple assets within Africa, as we've discussed?
Yeah, it's a very valid and good question. A traditional royalty company is hands-off, and they advertise as much, but they are hands-off. They have low staff numbers, and they don't really get involved with the operations unless something's necessarily going wrong or they're not being paid. Whereas we're different, we are very much boots on the ground, and we've been running Altus now for nearly 15 years. And as a team, we have a track record of working together, and a number of our shareholders have been backing us in Altus and previous ventures to that. And so we've got a fantastic, I'd say impeccable track record for CSR and how we operate in Africa. But we don't necessarily make too much of a song and dance about it. Mm-hmm. It's because it's a feature of doing business. And you could say, well, that's just capitalism, but actually it's not. It's way beyond that. Being a good corporate citizen is essential. We have always worked very closely with the local communities where we operate. It's fundamental. You have to. We are often in a situation where we are training people from local universities, wherever that might be, at the capital city, or if there's a city or town closer to where we're working, we'll often take 2 or 3 geologists, recruit them, train them, put them on our properties, and without exception, they are immensely talented, and the quality and their work ethic is phenomenal. But there's also the softer side, which is doing the right thing, and we take great pride in the way we perform in Africa with our local communities, and there's all sorts of small initiatives that you can do that help, and you have to have a light footprint, and you have to be totally sensitive. And as I say, we're very proud of our record for CSR in Africa. And just as an example, recently we worked with the British High Commission in Cameroon to help with their COVID relief mission, and primarily in the north of Cameroon, which is a bit more remote. And a number of UK companies contributed to that, and we're proud to help. And that's a nicer part of the business, I guess you can say, the fact that we do leave a sustaining positive footprint. And ultimately, you hope that the risks that our shareholders are taking and they're channeling through their capital investment into Altus results in the discovery and development of gold or copper or other mines that have a longer lasting and incredibly positive impact, not just on the local area, but also on the finances of the whole country.